Perfect. Well, good morning. My name is Daniel. I am with VantagePoint AI, and we're gonna do a little VantagePoint analysis of the Nasdaq, the Dow, the SPY. We'll spend some time digging into some of those charts and walking through the live market analysis as I see it here in the VantagePoint software. Hey Ismail, glad you're here. If you could, this is a live session, as you know, so just let me know that everything is working on my side of things, that you can hear my voice, you can see my camera, you can see me on camera, and everything is working as designed. If that's the case, just go to the chat box. Chat box is open. Love to hear from you. Love to say hi. Love to see your name, and we'll get things kicked off here. Our goal today is just to understand what's going on from a market volatility standpoint, to understand what's going on from a market trend standpoint. We can take a look at a lot of different things and do some analysis, some in-depth analysis, step by step, walking through it to understand what we see based off of the artificial intelligence technical indicators that I utilize in the VantagePoint software. So, hey, Daniel, good. Leon, everything's working? Good, good. All right, Male Blue, Miguel. All right. Thank you. Thank you for letting me know everything is working as designed. We'll also spend some time walking through some other assets. Well, I'm going to look at light sweet crude oil, or if you're an ETF trader, that would be USO, United States Oil Fund, and look at that impact, some of the impact that that can have and has had on some stocks. So we'll spend some time digging into the details there, and then I plan, after we're done with some of that education and walk through, we'll look at some tickers maybe you're interested in and see what we can understand from the current market movements and what's expected to happen over the next few days. See, what I'm intending to do in this session, as well as all the live sessions, and by the way, if you haven't subscribed to the VantagePoint YouTube channel, hit the subscribe button. These sessions, we do them every couple of weeks. I'll dig into the charts, dig into the information, and see what the artificial intelligence is saying, and share that with everybody here in this session. Hey, Don. Daniel, looks like all is working well for you guys. Good. Okay, great. Thank you for getting involved. That's fantastic. All right. Just a quick reminder for everybody that we are talking about trading, and trading involves risk. You shouldn't be trading with money you can't afford to lose. That's why they call it risk capital, right? Money management is key. Regardless of the tools you're using, nothing is perfect. And I'm going to show you how to stack the odds in your favor and do some analysis that you can do day in and day out if you like. Just understand money management is a necessary part of trading. And I may share some user experiences with you based on what people are telling me. And I'll be sharing those experiences, unverified. I haven't looked at the results, but I'll tell you what they've said. I'm not saying your results will be like theirs. Heck, they may be unrealistic results, but at the end of the day, I'll share with you what other people are saying. That's my goal here, is just be as transparent as possible. So, with that said, let me hop in to my software here. And for those of you that have not attended this live session before, the software that I've been utilizing now for over a decade, 12 years, is VantagePoint. It utilizes artificial intelligence. I'll dig into some of that through today's session. But what I'm doing primarily in this software is understanding where the trend is likely to go, where the short-term price movements are expected to go from a swing trading mentality. A position that may last a day, 2 days, 3 days, a week, a month, as long as that trend continues going the direction that I'm expecting it to go. Heck, it could last 6 months. Some cases that happens. But it is a swing trading mentality. Day trading is something we can dig into as well. Heck, all trading can be benefited from the artificial intelligence in VantagePoint. And, from an educational standpoint, I'm going to show you exactly how to do that. So first of all, when we look at the chart on the screen right now, everybody should be able to see, in this case, the SPY. And if you look at the chart, you see the SPY from June 26 to September 26. So we've got a 3-month period of the SPY. Now, September 26 is today. This chart updated at 6:30 p.m. Eastern Time last night. Every night at 6:30, I get the fresh forecast for the next few days, and I can do the analysis on what's expected to happen based on the artificial intelligence. So right now, what you see on the screen are the actual candlesticks for the SPY, the S&P 500, the ETF, right? As well, you see a blue line and a gray line. There's also a shaded red area, shaded green area. And I want to walk you through the analysis that I do on a daily basis to understand what's expected to happen, whether we're talking about ES as a futures market or the ETF here, or individual stocks or cryptocurrencies, Forex. There's so many assets that I utilize this software to analyze. We'll do some of that today. But the key to what I'm looking at right now, for those of you that haven't been able to do this in the past, you know what? Let me get a pen really quickly here. As you can tell, this is a live session. So yeah, here we go. Got it. So what we're looking at here on the screen is this blue line. The key to this blue line is the calculations that are going into it, the analysis that's going into the blue line. And for those of you, again, that haven't heard of this before or utilized this before, hey, Renee, nice to see you in the chat. Nice to see you. Renee is a VantagePoint user, so I recognize the name. But this blue line is actually a 3-day prediction of trend direction. And what that means is that if this blue line is below this gray line and pointed down, this is the artificial intelligence in VantagePoint saying that this trend is expected to be weaker over the next few days, right? It's going to take some real bearish move for this gray line, which is a simple moving average, to catch up to this blue line, which is a predicted exponential moving average. And when I say predicted, what I mean is there's predictive information in the formula. I can dig into that if you're interested. If somebody wants to get a little bit more information, just let me know in the chat if you haven't heard of this before. You know, my intention is to do the analysis on the SPY, but I also don't want to leave anybody behind. So if you're wondering what a predicted moving average is, or how it's predictive, or how it's calculated, of course, jump into the chat and let me know, and I can try to answer that question for you. Or you could always go to VantagePointForecast.com. If you go to VantagePointForecast.com, we can work with you one-on-one and answer your questions there. But as I said, happy to do it in this session if that's something that you feel like you need. But what it's doing here is the fact that it's pointed down and it's below that gray line and the shaded area is red. That's the artificial intelligence in the software and VantagePoint saying bearishness over the next few days from a trend direction standpoint. That's a very valuable piece of information when it comes to swing trading, day trading, investing, or just understanding the overall direction that, in this case, the SPY is expected to go. And I've got a very clear bearish trend direction. Now, this is a 3-day forecast, right? The software that I'm utilizing, VantagePoint, can forecast 1, 2, and 3 days in the future. And right now I'm looking at the 3-day trend forecast. In case anybody is wondering, that's what we've got on the screen here. I have the ability to shift that to a 2-day trend forecast by going right here to the medium-term crossover. I'm gonna remove this box really quickly just to show you that medium-term crossover, and this is the data that came out at 6:30 p.m. last night, also says bearishness because the blue line is below that gray line. That simple moving average needs to move down to here where that predicted moving average is, and indicating more bearishness over the next 2 days as well. And then, I can also go down to a 1-day forecast and see that assessment as well very quickly. I can go to the short-term crossover, and when I go to the short-term crossover, you can see that blue line is below. We do have bearishness expectations from that 1-day forecast, but we also have that blue line pointed up a little bit saying, although there's major bearishness expected in the trend, don't be surprised if we get, a high that could be higher, some consolidation throughout the day. We kind of started with some consolidation as the day opened up and the market opened, but just understand what you're looking at as we're getting overall bearishness from what we're seeing from a forecast standpoint in the trend area for the SPY. All right, so now I know from a SPY, I'm expecting a downtrend to continue. Not a new downtrend to start, but a downtrend to continue. That 3-day forecast said that there was a downtrend expected, call it 447 or so, and it's been down ever since and expected to go down some more. And so far, I think it's clear. If you're in this session right now and you're in the markets or following the markets, it's pretty clear that the SPY, opened down. It gapped down on the open and it went down further and it's still down at this point. So that trend forecast, came to fruition already to this point. Now it's early in the day, and we're going to do some more analysis on indicators. For instance, I am going to turn on the neural index. And the reason I'm walking through this, and I said this in the description of today's session, is I want to do an in-depth analysis of this information step by step so that everybody that's in this session can really get a sense of what the AI is saying. Matter of fact, I am going to turn off that crossover for a second and just have, right now what you see on the screen are the candlesticks, the actual candlesticks, a predicted high and predicted low, and then down here at the bottom, this is the bar that I want to spend some time on right now. This is the neural index. Hey, Renee. Thanks for that comment. Renee said, love to come cheat off of Daniel when I can. Is it cheating? I don't know that it's cheating, right? It's about stacking the odds in your favor by, utilizing tools that can give you an edge. So I love it. All right. So what we see here is we see overall, when this bar is red, this is expecting weakness in price, so bearishness. When it's green, it's expecting a little bit of bullishness in price. So easy peasy to interpret, red down, green up, right? And what we can see here is that we're getting a lot of red going into today. And last night, the neural index said, well, the bottom is not expected to fall up. We could see a little bit of strength in price. Well, that doesn't agree with what we saw from a trend standpoint. That's gonna happen. That's okay. Do you know why? It's okay because the first thing I'm always gonna do is understand what the artificial intelligence is saying about the trend, and we clearly got trend down, right? That's clear. Then I can go to the neural index and see if the neural index agrees, and if it agrees, then I've got trend down, strength down. I don't have bearish strength expectations, right? It just turned from bearish to bullish. It doesn't mean prices are going to rise. It just means there's some disagreement in the predictive indicators. And that's the great thing about this analysis, is that the output of one indicator doesn't change the output of another indicator. All of these indicators are independently calculated from the artificial intelligence and put on the screen. One indicator does not influence another one. What influences these indicators and where these indicators are derived from is from the intermarket analysis. The intermarket analysis, by the way, for those of you that don't know, is the process that the artificial intelligence uses behind the scenes to figure out what's going on in the SPY. As a matter of fact, I can show you a little bit of that right now. Just really quickly, I'm just going to put it up on the screen so everybody here can see what the AI is looking at to forecast the spider. Right in the middle of the screen is a SPY, and you can see it's looking at palladium. I mean, who here is looking at palladium, right? Octa, natural gas. You can also see some world currencies. Here's the US dollar, Japanese yen. So much stuff in here. Euro, look, there's an ETF. You probably aren't looking at the iShares TIPS bond, but what the AI is saying is that this ETF, when prices change, will influence the price of the SPY either up, sideways, or down. This is intermarket analysis. This is a proprietary process. Matter of fact, this is patented. There's nobody else in the world doing that. But I just wanted to pop it up on the screen. We can dig into the details of that later if you want to. Just let me know by going to VantagePointForecast.com, and we can dig into the details there one-on-one. But the reason I wanted to show you that is so that you know that these indicators aren't just looking at price. Why I put my faith in these indicators, and for over a decade now, I've seen it happen. And by the way, I've been involved in the markets for over 25 years, right? I've seen a lot of indicators. I teach a lot of indicators. I know the indicators inside and out, and there's nothing that, in my opinion, is as consistent and valuable in giving you an edge as what we're looking at here. Even in this case, when the indicators don't agree. This tells me that there is certainly bearishness going on, but I've got to be cautious about how strong that bearishness is expected to be. As a trader, I want that comprehensive view. And that's what we're doing here is we're walking through indicators these are non-redundant indicators. One is about a trend. One is about trend strength. We've got momentum of that trend prediction down here at the bottom. And we can see these momentum indicators are curling up here at the end, but they're still down when I assess them from the beginning of this trend to where they are today. Look at this. These indicators are creating lower highs. They're still down from where they were when this trend dropped. So I have bearishness in the momentum. So all in all, what we're getting here is more bearishness then consolidation or bullishness from the SPY. Trend is bearish. Momentum of that trend is bearish. Strength, not exactly bearish, more of a bullish to consolidated. So we know that, yeah, we can expect a further down market today. But we're not going to stop there, right? We're just going to keep on layering on the analysis so that we can walk away with a comprehensive view. Because look, I know as well as everybody here, that's your hard-earned money. Like, let's be real. That money that you're trading with is necessary either to your financial future, or maybe you want to grow an account, leave a legacy for your kids. I don't know what it is, but you've got to be able to have a comprehensive view when trading your hard-earned money. That's my opinion, right? I'm not providing trading advice here, just from an educational standpoint. That's how I look at it. So we're going to keep on going down the rabbit hole. And one of the things that I'm going to do really quickly is just, I'm gonna take off this crossover for a second, this predictive indicator, and I'm gonna pull back to multiple years of data here. Here's the candlesticks for 3 years of data on the SPY. Hey Terry, glad you're here. The reason I want to do this is because I want to see where the price is right now, and I want to see if there's any relevance to where the price is right now to old price points. For those of you that know how to utilize support and resistance, this is kind of a long-term support and resistance view. And why I like to do this is to understand whether or not this price point is significant. And I can already see it is. Here, look at this. Here, oh, let me see what's going on here. Sorry about that, I got a phone call. Let me just turn off that phone. All right. There's a significant price point. There's a significant one. There's one. Look, you can see where these candles came down and hit this point, either from a support standpoint or from a resistance standpoint. The price that we are seeing right now in the SPY over the last 3 years has had significance historically. And for those of you that know about support and resistance, what support and resistance is, in case you're wondering, let me just get on the same page here. Support and resistance are old price points that can have an impact on future price. Write that down, right? That's a great way to think about it. These are old price points that can have an impact on future price. Let's define impact for a second. Impact can cause price to stall, go sideways, can cause price to bounce and reverse off of that point, and can cause price to break that point and then rally, either bullishly or bearishly. And that's one of the big benefits here. That's one of the big benefits to just doing some quick analysis on this to see whether or not the current price and old price points have some significance. And back to the chart, they do. They do. Well, what does that mean? That means that this price, if this price cannot hold, 428, if this price cannot hold, then we can see prices fall down to the next level. Now, 428 doesn't mean that prices have to hold there for, a second or 1 day. When I say hold, what I mean is from a support and resistance standpoint, let me zoom back in here really quickly and erase some of this stuff. If I get prices below 428 and I get a close, this is end of day data, by the way. This is end of day data. So at 6:30 p.m. Eastern time, I get those forecasted information, and now I can do some support and resistance analysis, and I can say, look, if I get a close below that 428 level, and then I get 2 confirming closes below that 428 level, I can expect prices to continue further. But if I get a close below 428 and then over the next 2 days at some point I get another close above it, that is like this. You see this right here on the chart? Look, price went up, failed off of it. Broke it, failed off of it, went above it, failed off it, and then you got to break above, 2 confirming closes, and then a rally. That's how support and resistance works. So we are now at a point where I have to be on the lookout for that. Well, with bearishness expected, what I'm looking out for is whether or not prices can break 428 and stay below 428 for 2 days to see if prices are expected to go lower. Again, I want a comprehensive view, so I'm looking at things from all perspectives. I can also take this to the next level, and I can have VantagePoint put on short-term support and resistance levels, right? There we go. I just went into my indicator tray here. And for those of you that have VantagePoint, you probably have these indicators. For those of you that don't, what I've done is I've told the software to go find those resistance levels, right? And then this is something that we created here in the VantagePoint software. Compare one resistance level to another one and create a verified resistance zone. That zone is determined by putting two levels together, because that zone is more of what I'm concerned with than just that price level. And in this case, from a support point, it goes the same way. It finds all the support points, whether they're old or new or still intact or not, and then connects the ones that are intact and relevant. I've got a support zone now, a verified support zone that we broke into and have stayed in now for a few days. This is below that 428 level. So that means I can expect prices, based on what we've seen so far, no problem to be in this range. If I don't get prices to stay in this range and they bounce out of this, well, then I can expect a little bit of bullishness in the markets, right? From a support and resistance standpoint. Am I expecting that? Not anytime in the next few days. I think everybody can see that based on what we were looking at with the predictive indicators. And in case you're wondering, I can go put those right back on, get our crossover back on the screen with our predictive indicators, and we've got more bearishness than anything so far across the board. And that support and resistance has room between that 428 and this looks like a, let's call it 425.50 roughly, before there's any short-term support that could push that price back up again. So 428 to 425, certainly realistic. That 428 to 425 range is something that's expected over the next few days. And that 425 level is that short-term support level that I'm looking for prices to either, bounce off of that, reject off of that support level, or break through it and just keep on going. And the one thing that I'm going to use, I say the one thing, it's momentum. But I like to use multiple momentum indicators to confirm when prices get into this deep into a support zone that is expected to go further. In the VantagePoint software, I've got predicted momentum indicators. I have predicted RSI, I've got predicted MACD, I've got predicted stochastic. I've got several predictive indicators that I can put on the screen. And right now I just put on TSI, here's stochastic, heck, I can put on percent R, MACD. I can put on multiple momentum indicators, again, because I want that comprehensive view. And what I'm seeing is bearishness from that 1 day. This is a predicted 1 day momentum. I've got consolidation on that stochastic, so sideways. I've got bearishness on that true strength indicator here. That's another momentum indicator. And I've got consolidation on percent R. So I certainly can expect prices to be between 428 and 425 like we were talking, because there is not enough bullish momentum to push prices up out of that zone. There is enough bearish and consolidating momentum to allow prices to float lower. These are predicted momentum indicators. Let me just take a breather right there and see if there's any questions so far, because I think everybody should by now see that I am walking through a pretty methodical analysis on the SPY. So far, all we've done is a SPY, and I'm not going to go much further than this, but I wanted to just give everybody a chance to say, hey, take a look at what's going on in the SPY based on the predictive information from the patented artificial intelligence that I utilize. And again, I had this at 6:30 p.m. Eastern time last night. So nothing about what's happening in the SPY today is unexpected. The SPY is at 427 right now. Remember, I said 428 to 425, totally expected based on this analysis. Do you have questions about that? Go to the chat box if you do. If there's something there that you want to dig into, then by all means, let me know. And I'm happy to dig into it. Happy to dig into it with you. I'll keep my eye on the chat box here, grab a quick drink. All right, nothing so far. I guess either it's making sense or it's not, and you don't want to talk about it. But either way, you have an avenue to ask questions, hop into the chat box, and we can dig into that. All right, so let's go a little bit further into it. Let's go. Hey, Daniel, I see your question about fractal RSI. Thank you for that. I appreciate that. Yes, VantagePoint has a predicted fractal RSI, and we can certainly dig into that in your VantagePoint University. Fractal RSI is one of those indicators that's available in the VantagePoint software that is predictive with the artificial intelligence. It uses fractal energy and a Laguerre RSI. That's for the advanced VantagePoint users, of course. You know, we like to layer our learning in, but that's something that we can certainly help you with. Here's the Q. I'm not going to do it in this session because we have some people here in this session that don't have VantagePoint, and I don't want to, you know, get too deep into the weeds. All right. Let me see. VantagePoint. Does Delano? I see your question is VantagePoint website break this down daily? I'm not sure what you mean by that. The VantagePoint software does, and if you have the VantagePoint software, you get this updated information at 6:30 p.m. Eastern time every day. That's something that the VantagePoint users have. By the way, it's VantagePointForecast.com if you don't have the software and you want to find out a little bit more about it. Here are the Qs. Here are the Qs. Here's the forecast for the Qs. This is the, you know, when we say the Qs, that's the Nasdaq ETF, right? And the reason I'm doing this on the ETFs is so you options traders that like to trade, or those stock traders that like to trade ETFs can see. I could easily do this analysis on the NQ itself for you futures traders and do the same walkthrough on the analysis. Oracle J, I see your request for Oracle. Yep, I see that. Power share Qs. So here's the Qs. When we look at the Qs, you can see a same type of layout, almost identical to what we were seeing on the SPY, right? Overall bearishness in the trend, a little short-term pop in the strength, but overall momentum bearishness. I can do a similar analysis that we just did on the SPY on the Qs to understand, and look, I'm going to drop this line on it for you. I'm going to show you exactly what I mean. The analysis that I do is kind of a step-by-step process that I'm going to do as often as I can on whatever indicator I'm looking at, whatever chart I'm looking at. Look, there's that line. There's some significant support and resistance hits. So where we are right now has some significance. Look at this gap down below, right? I mean, there's too much value in understanding how support and resistance. Look, there's several points in the last 3 years that are impacting or can impact price where it is right now. And I put that line right at the low from yesterday, right? I can put on my short-term support and resistance, and I'm getting the same picture here. And that's valuable to understand. There is a difference in the picture that I'm seeing here, is that the gap between the low and where that next short-term support point is much, much smaller here on the NQ. Right, that support point, we can call it 354. That low from yesterday, oops, sorry about that, is 356. We can call that roughly. So we're talking about $1 here on the Qs. But regardless, there's still enough room there for the Qs to float around between that 354, 356 level, right? I think we can see that very easily, that floating around right here in this level is possible based on the support, based on what's going on with momentum, based on what's going on with the trend. I think you guys can see that it's very clear that prices are expected to float lower, and you can see almost exactly how low they're expected to float based on that analysis. Diamonds, same kind of scenario, right? This is the Dow as an ETF. Same scenario here, where if you look at the Dow, you can see prices floating lower as well. We have a little bit more bearish momentum on the Dow. We don't have quite as strong of a short-term forecast on the Dow. So of the three indices, what the VantagePoint software is saying right now about the Dow, diamonds, it's saying that diamonds is expected to be very weak, right? All three of them are expected to be weak and float lower today. And if I put on the very short term, the verified support and resistance, I can even just put on support because that's what we're really doing the analysis on, but I'll put them both on. There you go. That support level, 337. We can call it 337. If there's enough bearish momentum, and right now we see more bearish momentum on the Dow than the other ones, we could break that 337 and even go down to that 335 support level that goes back 2 months. Well, let's go look. Let's see if there's enough momentum, bearish momentum on this to push further, right? Stochastic percent R. Heck, I can even put on fractal RSI. I'm not going to dig into the analysis of it, but for those of you that are asking, you can see, look, down, down, consolidated, down, bearish, 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 consolidated. So we definitely have enough bearishness, no doubt about it. That's fractal RSI with fractal energy, predicted percent R, predicted stochastics, predicted RSI, predicted MACD. That's the analysis that I'm doing right now on these, and you can see in a matter of seconds, I got more bearishness on this than the other one. So we can certainly expect prices to break that support level, get down to it at least, and even maybe get through it based on how much bearish momentum there is on the Dow. Let me just back up for a second. The reason I do this analysis like this, I layer it in, I layer it together, I look at non-redundant indicators that give me an overall perspective on what's going on so I can walk away with an educated view of what the markets are expected to do. Whether I trade the Dow, the Nasdaq, the SPY, or the ES, or don't trade them at all. Maybe I'm a stock trader, an options trader, right? Regardless of what you do, knowing what's going on for those three major indices, and you could even do this on the Russell, right? Another great index that sometimes leads the ES. You could do the same kind of analysis and walk away understanding what the overall tone of the market is expected to be. Not what it is or what it was, but I'm using predictive indicators here that go up to 3 days in the future so I can get an expected tone. All right? All right, let me just take a look at the chat and see if there's some questions here. Joined a little bit late. VantagePoint able to show you ahead of time where the market was falling. Oh yeah, absolutely. So there was a question from Akeen. Sorry if I messed up your name. The question is, could VantagePoint show you ahead of time when the market was expected to fall? Here it is on 9:15 on the Dow. You can see the latest trend. That was 2 weeks ago. Today's 9:26, so that was 11 calendar days ago. So yes, absolutely. Absolutely. It predicts the direction. It predicts the strength. Yes, Akeen, to answer your question, the value of this artificial intelligence, and this is not new. For Akeen and anybody else that's new, we started utilizing and creating this artificial intelligence in 1987 as a company. We released it in 1991 for traders like you to use, and it's been patented technology that traders have been utilizing for decades and decades and decades. This isn't new. This isn't a good idea. This is something that is been available and has been evolving over the years, and traders have been using it for a very, very long time because it does global market analysis to predict the trends in advance. All right, Akeen, hopefully that answers your question. Sorry, I'm just taking a look at the the chats to make sure I got everything going on here. Let's see. All right, the VIX. Oh, why look at the VIX? Can anybody tell me the value of looking at and doing analysis on the VIX? Just give me 2-3 words in the chat box in your own words. And this is, you know, call it a pop quiz, call it interaction, whatever you want to call it. I'm interested in your perspective on why somebody would look at the VIX and try to understand from the VIX what's going on. How does it help you? In your own words. I know how I like to use it, and I'll explain how I like to use it and why I like to use it, but I'd love to hear from you how you might be using it. All right, sorry about that. I had to get a little drink, right? Yes, John. Yes, they are. Options values. Oh, you're talking about for IV, for volatility. Yeah. If the VIX is increasing, right? If volatility is increasing, Stephen, Walter, then that'll have an impact on premiums. Yeah, value of the options, absolutely. How much fear is in the market? There you go, Renee. I love that. I love that word, as you know. Matter of fact, I'm going to heart that one. The reason for that is because volatility is kind of a measure of fear. And in the VIX, as an index, this is a futures market, what we're looking at is the volatility of the S&P 500. Well, if I know volatility is increasing, if I know fear is increasing, what do I know about the S&P 500? That it's expected to drop. A lot of times market dropped in time of fear. Well, think about the shutdown looming, think about the rates being higher for longer, all of that stuff. There is certainly fear, right? We're talking about, you could talk about some of the fundamental things going on from college loans, right? There's so many things going on from a market standpoint that can invoke fear. Well, VantagePoint indicated that the VIX index was expected to be higher and start going up past this channel that's in 3 days ago, 4 days ago. This was last week, right? And you can see it's certainly doing that. If I go back to the short-term forecast, you can see that we got a crossover confirmed on 9/20. Well, the current forecast on the VIX on the 2-day, the 3-day, and a lot of those things is still bullishness. And if we go to the support and resistance levels that we were talking about, I want to show you something. Here's the verified support. There's the verified resistance. This is what I wanted to show you. For those of you who use the VantagePoint software, you probably saw this very clearly. This is one of the things we teach where the VIX yes, there you go, Ron, suggests volatility, had a break of that resistance level that was set back here. And then had 2 candle closes confirm the break of that resistance level, indicating that we could expect the VIX to be higher. There's some support and resistance rules that we apply to these levels and these different zones, and we could see it. Oh, thank you for that. There we go. How's that? There we go. So here's the VIX. Here's what I was explaining. I didn't realize it wasn't on camera. Thank you, Mojo, for telling me that it wasn't on there. Appreciate that. I think everybody can see it now. There we go. So this is what I was talking about. We got that break of resistance right here on the VIX. We got the 2 candle closes above it, right? Should be able to see that. Should be good to go. Let me just cross-check and make sure we're good. All right, looks like we're good. Everything's working as designed. Sorry about that. It was just a missed button click on my part. All right, so when we stop and look at this, we can see that there is some very good price action happening above this resistance level, expecting things to go higher. We can see that from the beginning of this. Look, this is the 1-day and the 2-day momentum of these predictive indicators, indicating bullishness. We've got a little bit of consolidation happening on the very short term, the 1-day momentum, but still, all in all, we're expecting the VIX, based off of what happened with this and the predicted moving averages, expected it to go higher, right? And the VIX went higher, right? VIX went a lot higher. You know, if we, where is the VIX right now? Let me take a look. 1851, there you go. No doubt what was expected to happen, which means if the VIX was expected to go higher, what was the S&P expected to do if we know high volatility times create a drop in the market? Go lower. And that's exactly what it did. This analysis is analysis that you can do right in the VantagePoint software. Let me see. Throw it out there. Some predictions of the SPY month out. Predictions of the SPY a month out. Well, we don't predict the SPY a month out, so I'm not sure what you mean there, Jason. Oh, you're talking about the seasonal movements of the SPY a month out. Yes, we do have seasonal movements in the VantagePoint software using the seasonal indicators. We have a lot of different indicators that are available depending on your place, depending on how much you've learned. We like to layer the learning in. So we certainly have seasonal indicators that can draw out that far, absolutely. For instance, the seasonal forecast of the SPY could tell us whether or not every year, from an average standpoint, the yield of the SPY is bullish or bearish going out further into the future. Yeah. And again, some of the indicators we're taking a look at right now on the screen, on the chart, are indicators that give us the ability to, understand what's happening, what's happened, what's expected to happen. And look, the green line on the chart, that's a seasonal indicator telling us that from 8/16 to where we are today, seasonally, the SPY tends to drop. Let me clear some of the stuff off the screen. We'll dig into this a little bit for you, Jason. I'm not sure what you were getting at, but I'm happy to dig in a little bit and answer your question. I don't want to confuse people that don't have the seasonal indicators, but this is a live session, right? Why not? There we go. All right. Now all that is on the screen up here on the top are the candlesticks. And along with the candlesticks is a seasonal indicator that measures the day-to-day yield of the asset that it's on, looking back historically. And in this case, for the SPY, let me show you. If I go into the properties of the SPY, let me go into the market details of the SPY and show you right here. Since January 29, 1993, the artificial intelligence has been working on the spider, this market that we're looking at, the SPY, 1993. So that's how long the AI has been utilizing the inputs from the SPY seasonally and for all this information. That goes way, 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 way back. Can you remember what you were doing in 1993, right? Well, the artificial intelligence is utilizing all of that information in this case. And what we're saying is, yeah, there's historically, the seasonal movements of the SPY starting August 16th indicate bearishness, right? Jason, if that's what you're getting at, I'm not sure if that's the case, but you can see it. That is on the screen. All right, let's take it a step further. Let's get outside of the indices for a second, and let's take a look at light sweet crude oil. A lot of the questions I get around light sweet crude oil are related to the artificial intelligence. Did it see this bullishness in light sweet crude oil? If I was trading crude oil, would I have been able to take advantage of the big trend up? And what we're looking at on the screen, right? What we're looking at on the screen, let me see. Really Love says, oh, I see. This is a recorded presentation, not really live. Got it. Nope, this is live. This is a live session, not a recorded session. Now, the recording of this session will be on our YouTube channel. For those of you that subscribe, you can go to the videos and watch the recording of this. But you can see in the bottom right corner, it is 12:11 p.m. on 9/26. So what we're looking at here is that at 6:30 p.m. Eastern time last night, we got the update for today for light sweet crude oil. And light sweet crude oil, you can see in a channel. And you can see the predicted moving average. For those of you that missed the beginning of this session, the blue line is above, the shaded area is green, but it's moving sideways across the screen. Matter of fact, they're almost in the same spot. That's clearly telling me that if I'm thinking about, if I'm trading or working with light sweet crude oil, I've got some consolidation to bullishness expected depending on what goes on with the other markets. Now, I can also see that forecast started way back here. And that blue line stayed above all the way. I'm going to just go to the close of yesterday when I would have had this information. That's a 12.5% hypothetical gain right there. The futures market, one contract could have produced about $9,900 in gains on top of this trend back here. So the answer to the question that I get often is, did VantagePoint predict the major bullishness in light sweet crude oil that we're experiencing? And you guys are seeing it on the screen. And I can layer on whatever indicators I want. For instance, if I go put on those support and resistance indicators that we were just talking about, you can see that the crude oil chart has room between the close and that resistance level, and room between the close and that support level. Heck, it even says that the low could come down and bounce off of that support level. That's how valuable this is it gives you both sides of the coin. It helps you understand what's expected. For those of you that like to trade light sweet crude oil or look at light sweet crude oil, you probably know the low 88.19. 88.19 is the low so far today on light sweet crude oil. VantagePoint predicted a potential low of 87.98. By the way, this is a predicted high and predicted low. And the numbers appear over here for those of you that don't use the VantagePoint software. So that's saying that we could see a low that low, and we could see a potential high in light sweet crude oil, P high of 90.19. So again, these aren't down to the penny. I mean, heck, I don't know anything can get down to the penny, but that's the current move in light sweet crude oil as we speak right now. And the gray bar is what was predicted. And that was at 6:30 p.m. last night. So that's pretty powerful if you ask me. And you can see that there is still bullishness going on in light sweet crude oil. And maybe you don't like to trade CL and you like to trade USO. Here's USO, same exact time frame, 3 months. And the question is, you can see bullishness back here, two big bullish trends in USO, doing the analysis exactly the way. Let me show you the analysis that you would do when you see this. The first thing you look for is a crossover, right? That's step one. I'm going to put a little 1. When you see that crossover, if you get a crossover, then you go down and you do step 2. And you look at the neural index to see if the neural index agrees. If the neural index is green, it agrees, right? There we go. And then we go look at the predicted differences and we see if they're creating higher lows or lower highs going into that day. And we've got higher lows. So we've got bullish momentum from 1, 2, and 3 day indicators right here, all in agreement at the same time. As long as that blue line stays above that gray line or that shaded area stays green, you can continue with that trend and use that predictive information to understand the potential downside. Why is this relevant? Because what is being looked at for light sweet crude oil is very different than what was being looked at for the SPY. Look, Actra, Air Canada, natural gas. We do have the world currencies, but we also have Nordstrom and Gap and SunCoke Energy and Medifast and so many other things, National Bank of Canada. There's so many things that are going into the analysis of USO, which is United States Oil, and that tracks light sweet crude oil as an ETF, that the AI is using that stuff to generate the predictions. So if you like to trade options, you want to buy some calls on that, back then when you see that crossover, you certainly can. Or you can roll this into other forecasts, for instance, like the airlines. Correlated markets, intermarkets, Let me stop for a second. I don't know if everybody here knows the difference between a correlated market and a market that actually drives and influences another market. Correlated markets move together, right? Or inverse correlated markets, when one set of markets goes up, the other ones go down, but they don't necessarily drive each other. They just move opposite or with each other. What we were talking about a second ago is the fact that there are driving markets that will have an influence on other markets that then can be correlated, right? Oil is a driving market for the airlines. Here's America Airlines, right? Look back to the oil forecast. If I put the oil forecast on the long-term forecast on the screen right now, you can look back to see when oil started moving up. That was the end of June. We'll now go to American Airlines and see when American Airlines started moving down, or was forecasted to move down at the beginning of July. That's because light sweet crude oil, or USO, light sweet crude oil, can have an impact. Oil can impact the transportation sector, especially airlines. So for those of you that like to buy puts, sell calls, you can see how the artificial intelligence can produce immense, massive gains by doing both intermarket analysis and understanding that there's correlations out there that you can utilize to your advantage. And that's the detail I wanted to get into today. I wanted to dig into the intermarkets, understand what the forecasts are saying and doing, and then help you understand how to apply this stuff. There's American Airlines, here's Alaska Air Group, right? Same situation. And what I want to get across here is that these are correlated markets. America Airline and Alaska Air Group, you can see these charts side by side now on the screen, are correlated markets that are being driven by what's going on with crude oil. There you go. And that's a piece of information that I think everybody needs to understand, is that you can utilize intermarkets, you can utilize correlated markets, you can try to do a visual inspection and figure these things out yourself, or you can do like I like to do and let the artificial intelligence in VantagePoint figure it out for me. Southwest Airlines, same story, same scenario. Continental, look, you can see it's almost at the same time, beginning to middle of, or I should say about the middle of July, right after light sweet crude oil turned up at the end of June. This is the kind of information that can now give me a comprehensive view. Non-redundant indicators, especially ones that are generated from patented artificial intelligence, give me the ability to just get a bird's eye view and then drill in as deep as I need to understand whether there's real bullishness, bearishness, or potentially some consolidation, right? All right, good. I think we got some things going. Somebody put in the ticker Oracle earlier and said, hey, let's take a look at Oracle. So I'm going to pull up Oracle. I need to look back in the chat to see if there's anything in there, but let's see. I think Oracle was the only one that I saw come in earlier from Jay Layden. Let me see. Yeah, that's the only one that I see in the chat so far. If there is a certain ticker that you want to pop into the chat, probably got a few minutes to do some of these, right? So the Oracle forecast post earnings, by the way, this huge gap down was a bomb of earnings from Oracle. You can see that earnings happen right there. What does it say about Oracle at this point? Well, you could probably do the analysis yourself after today's session, right? And you can see that the blue line is below. The neural index in this case, red, the predictive differences. We've got a kind of a mixed bag from a predictive difference standpoint. We got some bearishness, we got some bearishness, and we got some bullishness. All in all, we got 2 bearish, 1 bullish from a predictive difference standpoint. So getting bearish is a predicted low, that's lower, a predicted high, that's higher. And all I do here, and what I'm doing, for whoever asked, I think it was Jay who asked for Oracle, is I'm analyzing just the latest data download, the right-hand side of the chart. Some of the indicators I'm looking right under that candle, other indicators I'm looking just to the left of it. Depends on whether it's a momentum indicator or a timing indicator, a market condition indicator. Which, by the way, maybe that's a future live session that we can do, is what's the difference between an indicator that can help you understand timing or an indicator that can help you understand market conditions. If you feel like that would be a valuable live session for me to do, let me know in the chat box, or maybe you have a certain live that you want me to do. Just understand, that there are users here that don't have the VantagePoint software. So if there's a certain live session you might be interested in hearing or seeing, go to the chat box and let me know. We're going to put on support and resistance for you, Jay. We see that there is a support point here that could impact price. That support point right now is down around that predicted low being 107.14. You guys can see that in the top left corner. Based on what we're seeing from the momentum indicators and some of the other indicators, we can expect prices to go lower than that. Yep, everything's bearish, bearish, bearish. Let's go check out our momentum. Let's check out volume too. Are we having, well, we do have more bearish volume. Jay, I don't know if you use the MACD in your indicators or RSI or stochastic or anything like that. I'm just going to grab 4 of them right now and see if we're getting bearishness. We're getting look at that. We're getting bearishness on all of the momentum indicators. When you see bearishness like that, that means this support level really has no chance. When there's that much bearish momentum happening in the momentum indicators, that support level has no chance, in my opinion. We can expect a break of that. We at 6:30 last night, we would have certainly expected Oracle to go lower, and that's why having, and looking at the software after each update is powerful. Jay, did you see that? Does that line up with kind of what you were seeing? Hopefully expecting. I hate to say it, but hopefully that wasn't a long position you were looking at trying to protect, because there's a lot of bearishness going on there, right? Here's Target. Here's 3 months of Target that somebody was asking for. The question is was this trend expected to go lower? If I had VantagePoint, if I was using this information. By the way, if you had VantagePoint, you would have seen that Target had a bearish crossover on August 3rd. August 3rd. That's the time to write some covered calls, in my opinion. That's the time to buy some puts or sell some calls, right? There's a lot of things that you can do when you see the fact that the blue line crossed below on a 3-day forecast. The 2-day strength indicator was bearish, and the predicted momentum indicators going into that day were bearish. I can load, the indicators that we've been talking about and support and resistance. I can load whatever you want. Whatever your license has, if you're a VantagePoint user, you can load on that chart. And I like to sometimes just drop a line on that day that we saw that crossover and say, okay, if this was something that the AI was certainly bearish about at the time. And look at this, bearish crossover, bearish, bearish, bearish. I have 100% of the indicators on the screen saying bearishness at that point. And this support point was not set yet, which means there was plenty of room to move down to this old support point, which is exactly what it did. So yes, this was indicated early on, August 3rd to be exact, and the current forecast was certainly expecting more bearishness and prices to go lower. One thing I want to point out is that %R stopped going down, turned up a little bit, right? So I've already got a momentum indicator that's kind of stalling out. That's good to know. I'd still expect prices to be lower, but some of the momentum is stalling out, which doesn't mean the trend is expected to reverse. It just means the bearishness I'm expecting would be kind of like yesterday's candle down, but not a rout, right? If I can put it that way, if that makes sense to everybody here in this session. All right, let's see PLTR, and then we'll end there. There we go. PLTR. Renee, you put that in the chat box. I see it again. Here we go. And when we look at PLTR, what we see, we got 3 months of data. The recent bearish forecast started on 9/19. But I see something. I'm not sure if you saw it just yet, but you probably did. There's a price point right here. I'm going to put on the VantagePoint support and resistance. There is a price point that was tested and failed. There you go. Look. See this? This is a support level. Where's my pen? Here it is. There's a support level. Green arrow. Price came down to that green arrow again and then failed to break it and went back up just 3 days ago. That price point was solidified as a new support point by these two candles that couldn't get below it, which means there is a support level that is propping price up right now. That support level, we can call it 1360, right? Price has not been able to get down to that 1360 in the last several days, and I can see some of the momentum starting to shift. This support level, based on the VantagePoint predictive indicators, check this out. I'm going to go to the one-day crossover, folks. Look at that. That one-day crossover said consolidation for 1 day. That means today's trend is expected to consolidate. Why? That blue line is below that gray line. The shaded area is red, but that blue line is moving sideways, if not moving up. Here's the predicted low. Here's the predicted high, Renee. So consolidation so far expected. Let's pop on our momentum indicators, and then we'll call it a day and see if there's, and we can, again, I can put on seasonal, I can put on professional sentiment. There's a lot of indicators for you VantagePoint users that I like to dig into. We'll save those in-depth sessions for our VantagePoint University education that is exclusively for VantagePoint users. This is a session I like to do for everybody. All right, take a look. See that? RSI got down here and flattened out, right? You guys can see that. There's still bearishness on MACD, but it's softening. We got a little flattening right here on stochastic as well, consolidation. Heck, percent R went below the oversold and then popped back up above it. So yeah, we have momentum flattening out at the same time. This support level is failing to get hit, which means we would expect total consolidation today right inside that gray bar on PLTR. You're welcome. You're welcome, Renee. Thank you for that comment. Always glad to hear and see in the chat box that this analysis is helpful and it's what you're looking for. So we've come to the end of today's session. I have thoroughly enjoyed educating you. Again, just a reminder, this is not trading advice, this is educational information, and money management is key regardless of the tools that you're using. And in this case, I'm using the VantagePoint artificial intelligence software, and happy to do in-depth analysis, and we'll subscribe to the channel. You'll get notified when we put our next live out. It'll be in about 2 weeks, and that could be a very valuable session as we get into Q4. All right, that's the last quarter, that's the last opportunity for you to really do some good things to make 2023 an incredible year. And for those of you that don't use the VantagePoint software, check out VantagePointForecast.com. For those of you that already utilize this, thank you for being part of the VantagePoint family, and for everybody, thanks for letting me give you the view from my vantage point. Have a great day, everybody.